Alrighty, I am making a video for you guys to help you to study for your intermediate accounting exam. So I took the exam just now. I went through each question and kind of revised it a little bit and stuff because I had to make some changes to how I normally test on this exam because we no longer have extraordinary items. So extraordinary items don't exist anymore. So they do exist, but people had a hard time classifying them. So they've eliminated extraordinary items. So the only thing related to extraordinary items that's going to be on your actual exam is the definition. And that's because it does apply to previous year's income statements. And so remember that an extraordinary item has to be both unusual and infrequent. So that's the definition of an extraordinary item. But anything else related to extraordinary items has been removed from the exam. So the first thing I'll point out that instead of 29 multiple choice, there are only 22. There are 3 problems on the exam. So those are identified down below. We didn't really talk a lot about the current ratio, working capital, and so on. And I normally give you guys those formulas, but those questions are no longer on your exam either. So I'm going to delete this box. So delete little table. Okay. And then I'm going to delete this little table. Okay. So I think there was one more. Working capital. And so those things are things you cover in finance. And so I decided to just remove them from my exam. So I want that to go away. So delete table. There we go. Okay. So only 22 multiple choice questions on your exam and the 3 problems. And so I'm going to walk through basically everything and remove stuff from your review sheet as we need to. So classifications on the balance sheet, current versus long-term. Remember that the definition of current, and so look up that definition, and current is 1 year or the operating cycle, whichever is longer. And so that's the definition of current versus long-term. And we would see that in the chapter 3 notes, probably on page 1. Temporary versus permanent is review from our previous chapters, but it's something that I don't want you to forget. So temporary is your red ones, your revenues, expenses, and dividends. And your permanent ones are ones that do not get closed. So that would be assets, liabilities, and owner's equity. Now, management versus auditor's responsibility for financial statements. This is something that's covered when we started talking about disclosures to financial statements and things like that. The key is that on management versus auditor's responsibility, on the audit report, the report explicitly states the responsibilities of both parties. Both management's responsibility and the auditor's responsibility is explicitly stated. It's not implied, it's actually said. They say the management is responsible for the creation of these financial statements, and then they say the auditor is responsible for reviewing them for material misstatements. And so, the key word there is explicitly, and it's because it's actually stated on the audit report. So definition of extraordinary items we already went through, and that was that they have to be both unusual and infrequent. Calculating taxes when we have extraordinary items got removed. So, but we do need to know discontinued items. So discontinued items and how we handle those. So discontinued items, remember, are below the line being taxes. So remember that the way that we did it, and this is just me kind of explaining the idea, we would have continuing operations. And so let's just talk about the format of an income statement. And I think I actually typed that out somewhere, but we can go ahead and just write it out. So don't forget that this will actually help with the big problem on the exam. So one of your problems on the exam is build a multi-step income statement. And a multi-step income statement, you should have a who, what, when at the top. And then you're going to start with revenue, less COGS is gross profit or gross margin, whatever you want to call it. From there, we subtract out our operating expenses, and that gives us operating income. From there, and so operating expenses are our normal expenses. And so operating expenses are things like rent and utilities and depreciation and things like that. Selling expenses, admin expenses, those are operating expenses. And then we will have plus or minus other income expenses. So they could be income, they could be expenses. And this is where we put things like, here. Okay, so operating expenses are normal stuff like salaries, depreciation, selling expenses, admin expenses, etc. And then here, this is where we put interest, revenue, expense, gains and losses. What else? Rent revenue goes there. I think that's what you basically need to know. Yeah, that's good enough. And then from there, this will give us net income before taxes. And then we do taxes to get net income. But when we have discontinued items, it goes below this. So then this number, instead of just being net income, will be called net income before discontinued. And then we'll do discontinued net of taxes to get net income. So this is the basic format of a multi-step income statement. And when you get down here, remember you have to do them net of taxes. So when you do them net of taxes, what happens is you do like the 40% over here, if that's the tax rate, and then you do 60% over here. And we did that in several homework problems, but, and this is only within basically the multiple choice questions, your discontinued items. Let's go to a homework problem so I can make reference to one to kind of help you. So let's go to, this would be chapter 4 homework. And here I have another, like this is your homework solutions that are posted out in Moodle. And so here's the basic setup of the income statement, just like what I just did. But me saying it while I write through it is probably a little bit better for you to see. So this multi-step income statement is a great example to help you with the big problem on your exam. So I made it as easy as E43 multi-step. So that problem is probably going to be worth 20 points. I haven't exactly figured it out, because since I removed some multiple choice questions, I kind of have to rearrange the points a little bit, but we'll see how that works out. So the problem will have earnings per share, and earnings per share is on net income and anything below net income. So over here, if we had to do earnings per share, we would do it on net income before discontinued, and net income, and you divide by the number of shares. And so we did that. Let's see. So for this problem, let me go ahead and okay, E43 multi-step is what I said to practice for this. Similar to homework and problem attached, and specifically look at E43. I think that'll be the one that will help us the most. And so what else could we look at? That one's a little bit weird. It's a little weird too. So P43 is probably decent to look at, but it's not nearly that hard. So I don't think you need to necessarily look at that one. But if you want to look at the discontinued stuff down here below the line, that is helpful. So you can see that. I think that might have been the one where we had to go back and pull each thing out. And so that was a little bit confusing. So P45, P45 from this year. Okay, so that one, I remember doing that. We had to take that $10 out of there. Again, all of those are a little bit hard. And so seeing how we did it here is good. I just knowing that you have to pull out the items net of tax. So the discontinued segment was 120. but the taxes on 120 at 40% are 30,000. And so this number right here, or I guess it's 25%, is 30,000. And so 75% goes here. On the 400,000, 75% goes here, 25% goes here. And I think you guys will remember doing that. It's just been a while. So you kind of have to look back into it to see it a little bit. And that's within the multiple choice questions. So like calculating taxes on discontinued items, some are net of tax along with the income tax expense account. So reporting of discontinued operations, just know that both the discontinued operations and the sale of the discontinued operations both go below the line net of taxes. Earnings per share disclosures, I already mentioned that those go below the line, and it's from net income, like everything below income tax expense has to have earnings per share. So it might be like in problem in exercise 4.3, you only had to do it on the very bottom row because this one did not have any discontinued operations or extraordinary items. So you only had to do it on this number right here, and you just have to divide by the number of shares. But if it was more like this one, then you have to do earnings per share on from taxes down. So taxes for regular stuff was up here. Each of those four numbers get earnings per share on them. Okay. So again, this is all multiple choice stuff. A definition of comprehensive income, I took it off. So from there, we move on to cash flow. And so for cash flow, there are a ton of questions on operating, investing, or financing. A ton of questions on operating, investing, or financing. So specifically, keep in mind that operating is all of your normal stuff. Investing is invest in self or others. And financing is owners and loans. Okay, so invest in self or others. Okay, would be anything to do with PPE, property, plant, and equipment, or other long-term assets like patents. And then if you invest in others, it would be buying or selling marketable securities, like investments in others, or notes receivable within here. I remember that being in your homework at different times. For owners and loans, owners would be like our stock and paying dividends. And then loans can be notes payable or a bonds payable is also, so getting a loan and repaying a loan goes in the financing section. So operating is everything else. And then remember the three foolers. Interest received, interest paid, and dividends received are all operating, okay? And so this would be in your chapter 21 notes, but also in your chapter 4 notes. And so we went through the definitions and you guys practiced, and you did that twice for chapter 21 homework and once in chapter 4 homework, where you were just identifying inflow, outflow, and things like that. Know the basic setup of a statement of cash flow, where, and this isn't a multiple choice question, and I just remember it. You would have cash flow from operating, and then you do cash flow from investing and cash flow from financing. And so those numbers are netted to get your change in cash. And so that would be like, so if this was A, this was B, and this was C, then this would be A plus B plus C. And then beginning cash would be whatever that is. And then ending cash would be A plus B plus C plus D. Okay, so if this number was 100 and this one was -50 and this was 300, then it would look like this number would be 350. And if beginning cash was 20, then my answer would be 370. So just knowing the basic setup of a statement of cash flows. Okay, so that will help you with just understanding cash flow for multiple choice questions. Okay, what else do I want to tell you? Let's go back to our review sheet. Single versus multi-step format. Really the only difference is how we present the data. And so it's just a presentation type difference. Where and how extraordinary items are reported. I think I took that off. But we already said it was below the line net of taxes. So that's the basic idea. So, and that's where discontinued items would be reported. So we can change that to discontinued. All right, calculate cash received or paid to employees, taxes, interest, etc. And so great examples of that will just be questions like on the review sheet. Let's see, I have a copy of the review sheet with me. I haven't really looked at it very much yet, but it might be in like a paragraph. So I want to make sure that you're prepared for that. So I see like number 17 is a good example where you see inventory and accounts payable and COGS, and you want to know cash paid to suppliers. Great question. Nothing wrong with that question. Another one, number 14, says something similar. They give you the changes in inventory, accounts payable, COGS, and they're like, what's cash paid to suppliers? On number 13 on the review sheet, they gave you accounts receivable, allowance, sales on account, and bad debt expense, and they want to know cash collected from customers. And so all of those are great examples, but it could be something like this. And so let me just write a practice multiple choice question. So I might say something like, sales for the year are 200,000, and I'm just making up this question. And then accounts receivable on 12/31 of 21 was 20,000, and on 12/31/22 was 25,000. What was cash received from customers? So when I get a question that's like this, I just fill the income statement. I'm getting cash received from customers, and revenue is always a credit. And then accounts receivable went from 20 to 25. So accounts receivable increased. So by 5, so cash received would have been 195. And so that would be a good multiple choice question. And then it would just say, what is cash received from customers? And there would be 4 choices, and they would be 195, 200, 205. So you would make sure you know how to do the journal entry. It could be the same type of thing for like interest expense. And it might say interest expense for the year was 27,000. And the balance in discount on bonds payable went from 23,000 to 19,000. What is cash paid for interest? So in that situation, then we would know interest expense is a debit. If I want cash paid, so that will be a credit. Interest expense is 27,000. The discount account, you know, the discount account has a debit balance because it begins with a D and because it's a contra liability. So if it went from 23 to 19, it decreased by 4. So if discount has a debit balance, we need to decrease it. So we credit discount for 4,000. So cash paid would be 23. So we need to practice those to make sure that we understand them. And so there's practice multiple choice there, but it's also exercises 21, I think 2, 4, and 6 maybe were good ones to practice. So let's check. I think I mentioned those. I mentioned 4 and 6, but there's nothing wrong with E21-2 as well, unless that was a one where you had to, maybe that was just a matching one. So not matching, but like operating, investing, financing. So let me go look. Oh yeah, E21-2 is not the one because it's one that you guys did T accounts rather than. So 4 is cash received from customers. 6 is cash paid for merchandise. And then I think you did 7. And I'm going to make a video for 7 because we didn't get around to going over it in class, but you guys did 21-7. And so I'm going to make a quick video for that one in a few minutes. But it actually had you do like the discount amortization. And so it's not a bad one to look at as well. It's not on the problem though. The problem ones, you can review 4 and 6 to handle the problem. And then exercise 415 is good here. It's an indirect method one. I'll come back to that. Where were we at? All right. Yeah, I was just talking through this one and I just did 2 practice multiple choice ones. Calculate cash flow given changes in accounts. So is this the example question? Which one that one is? Cash flow given different accounts. This is a good one for multiple choice. Okay, so it would just be like these. I'm just referring to like 13, 14, 17. So just those practice questions. And so calculate income taxes and amounts for extraordinary items. And so on that one, I deleted that one. So you don't have to do that one. Calculate change in depreciation when there's a change in estimate. I also deleted that. Okay, so our 3 problems. One of them is cash flow using the indirect method. One of them is calculating cash received or cash paid with different methods. And then the multi-step income statement that I already talked about. So let's go ahead and let's take a look at 21.4 and 21.6 on the homework solutions. So I just want to pop those up and show them to you. And if I were you, I would go rework those problems for 21.4 and 21.6. So 21.4 is this one, where you were given accounts receivable, revenue, and cash, and you just had to do journal entries to get cash received from customers. So they were pretty easy. And then 21.6, same concept. And so you would say, did inventory go up or down? Did accounts payable go up or down? And you would calculate cash paid for inventory. So that's a great question too. So look at 21.4 and 6 to help with the multiple choice question. And then you also have to do one where you do the operating section of cash flows. And so let's do one of those together. So I'm going to go over here. I do want to stop a second and I want to calculate how many points things are going to be worth. So I decided that this question, calculating cash received or cash paid, it's a pretty quick question. That one's going to be worth 6 points. I'm guessing this one should be worth like 20. And then this one. 1, 2, 3, 4, 5, 6, 7. So that's 36 points. So if 36 points are the problems, then let's see. I think that's fine. Okay, so each of your multiple choice questions are going to be worth 3 points apiece. And then I'm going to bump up this one to 22 points and this one to 12 points. So the one where you're going to do cash flow from operating using the indirect method will be worth 12 points. And the one where you build the big income statement will be worth 22. And that will get us to 106 overall, which gives you a lot of wiggle room. So let's go to just a blank Excel and let's do, so this first tab here, this was what the multi-step income statement looks like. So this is a 22-point problem. And then the question that related to cash flow, you're going to calculate, it'll be similar to 4 or 6 will be worth 6 points. And then there's a 12-point problem doing the operating section only using the indirect method. Okay, so all you're going to do is you're going to use your 4 special steps. So you're going to start with net income. You're going to add back non-cash expenses. So that would be like depreciation or amortization. Depreciation and or amortization. Add back losses, subtract out gains, and then do changes in current assets and current liabilities. When you do this, you use the general rule. The general rule is increase in current asset equals subtract. Decrease in current asset is add. Increase in current liability, add. Decrease in current liability, subtract. And then at the bottom, then you'll have just cash from operating. This is just the operating section. So this problem is worth 12 points. You're going to look at the given and you're going to start with net income. Then you're going to look at the given and you're going to find any depreciation expense or amortization expense, add those back. Then you're going to look at the given and look for gains and losses. If you have any of those, add them back. And then you're going to look at the current assets and current liabilities and do the changes in those. Now, remember, you don't include cash there because cash is the number you're explaining. So you're just going to do the changes in current assets and current liabilities otherwise. So I made reference to exercise 415. So that's a good one to look at. And so I want you to go back to a video and find me doing that. That would have been toward the end of chapter 4 before we started chapter 21. But I also want to take a look at exercise 21, I believe. Oh, that's the tax stuff. All right, exercise 21, I think is the one that I wanted to take a look at. It's Peach Computers. So I'm going to go ahead and work that one for you right now because I think it's a good one to practice. So basically it's asking you to find the different things, and then it's asking you to find cash received from customers. And so this is exercise 21. And the first thing it wants me to find is cash received from customers. So looking at the given, I see revenue. And revenue is 305. Looking around, I see that accounts receivable decreased, a decrease in accounts receivable. So a decrease in accounts receivable is 6. And then I have inventory, accounts payable, salaries payable, prepaid insurance, and income taxes. And so that means cash received from customers must be 311. So that's the answer for cash received from customers. Okay. The next item it wants me to find is cash paid to suppliers. So to find that, I know I'm going to be paying cash. I don't know the dollar amount yet. I know COGS is always a debit. And so COGS in this problem is 185. And then it looks like inventory increased. And accounts payable decreased. So to make accounts payable decrease, I need to debit it. To make inventory increase, I need to debit it. So it looks like cash paid to suppliers is 206. The next thing it wanted me to find is cash paid to employees. And so salaries expense, always a debit. So salaries expense is given at 41. Cash paid will be a credit. I don't know what it is yet. And then I would need to go look and see what salaries payable is. Salaries payable is an increase, so that needs to be a credit. So this number would be 41 minus 5 is 36. And then we have cash paid for insurance. So insurance expense is always a debit. Cash paid, I don't know yet. Insurance expense on the given is 19. And then prepaid decreased. So prepaid insurance is an asset. To make it decrease, I need to credit it. So it looks like cash paid is 10. And then cash paid for taxes, debit income tax expense. The income tax expense is 22. I don't know cash paid. That's the number I'm finding. And then income tax payable increased. That's a credit. Oops. So income tax payable is a $20 credit. So we only paid $2. That's weird. Okay. So it asked me to find those items A through E. So I just found those. So the answers to that are 311, 206, 36, 10, and 2. And so then from there, it wants me to build the operating section. So for the operating section, for cash flow from operating, I will start with net income because this is the indirect method. So it says prepare the cash flow from operating. Oh, it says direct method. I wanted to do it as the indirect method. I can. Okay, so I'm going to do it with the indirect method just so you can see what it would look like. And so I'm going to start with net income. I'm going to add back depreciation expense. And do I have any? I do, 11. And I don't have any amortization expense. So then I'm going to add back losses and subtract out gains. I have a loss on sale of land. And so loss on sale of land is 5. I'm going to add that back. And then I need to do changes in current assets and current liabilities. Oh, you guys, that's what's done off to the side. So I don't need to do it this way, but I was working through it and I was going to do it. So those are there. And so if we were to do it with the direct method, let's do it with the direct method. And so we would say cash received from customers is 311. Cash paid for inventory is 206. Cash paid for insurance is 10. Cash paid for taxes is 2. And cash paid for employees for salaries was 36. All right, and so I got 57, which is the answer. Cash from operating. I know that's the answer because it matches the reconciliation of net income for operating. So that's the indirect method that's given in the table on the right of the book. So that's a good example, but for the one that the problem on your exam, you're basically going to just do this. You're going to have the items and you're going to go through and do it. So go back to exercise, which one did I tell you? Exercise 415. So let me glance at it real fast and just make sure it looks okay. So exercise 415, is it this one? One more next to it. There it is. Exercise 415. So we start with net income, we add back depreciation, and then we add and subtract out increases in, decreases in current assets and current liabilities. And so you guys can check that and watch that video and rework this problem. Also, I wanted to show you that I did some extra practice. And where did I put that? Was it in chapter 21, homework solutions maybe? So I did some extra practice indirect. So I practiced with E2117. E2117. So I just took E2117 and did that one. And then I also did E2122. And so that's on page 1266 of the book. So I did 2 practices of it. So if you want to practice for that 12-point problem, go back to the exercise I referred you to, which was 415. But you can also practice E2117, extra practice, E2117, and E2122. And the solutions to that are posted out in Moodle for you. So you can actually practice that if you want to. And I think those were both good practices. So we have our 4 special steps and we have our general rule. Okay, so you can practice those. And so I think that that's everything. I feel confident that you guys are going to be fine now. You do not need to worry about the questions on the review sheet that relate to the current ratio and stuff. So I'm going to delete those off. If I delete them, did it mess things up here? So for right now, I'm just going to strike through it so that you don't have to do that. Purchase inventory, accounts payable decreased by 3. This is a good one. I like this number 3. Howard Company, and by the way, if you need me to work any of these, just text me the actual question, a picture of the question, and then I'll work it and send it to you. Howard Company's continuing operations, show the following items for, okay, since this one's an extraordinary gain, just change it to saying a discontinued item. So, so I just changed that wording so that you can practice with this one if you want to. And then same thing on this one, just change it to discontinued. And discontinued. So that you can use these to practice. Okay. I took this off. This one's good. I like this one. This one's fine, and these are all fine questions. This one's nice. Remember that premium on bonds payable is a regular liability. So just keep in mind that that's a regular liability. And because discount is a contra liability, but premium's a regular. And then on this one, it says unusual, infrequent, and material. So on that one, just treat it like a discontinued item and you can solve that one. But the one on the exam does not have any discontinued operations in the problem. So that's nice. So, all right, the rest of this is good practice too. So awesome practice. Okay, guys. So if you have any other questions, let me know and I will talk to you guys later. Thank you.